What's up, everybody? Welcome to the Stocks channel. And as always, I will see you in the next episode. Just a joke, just a joke. What's up, everybody? My name is Corey if you're new, and that mic drop was for being a bull in a bull market. Congratulations to all of you that bought the dip off of that strong support level, and now we have successfully completed the bear trap. So there's a lot of price action we need to go over today. So let's crack open this chart and see what's going on in the stock market today. All right, so we can see SPY had a very bullish candle today, going up over 2% and closing back over that critical level, which is our 20 simple moving average. So the bulls had a huge gap up open, got back over that critical support level and successfully closed above that level. So by far, this is extremely bullish price action. And you can see we are now just a stick whack away from getting to a brand new all-time high. How quickly tides can change. So remember that I specifically said I think this is all going to end up being a bear trap. And this is exactly why those things end up being a bear trap, because if you were buying puts down there while the rest of retail was panic selling and buying puts as well, you are now officially trapped in that short trade, and that's why I was trying to issue so many words of caution. There is very few chances we will ever see SPY getting back to 450 before we get to a new all-time high. So the bear trap is successfully completed, and anybody now shorting is going to get short squeezed, which is only going to add fuel to this fire, and we're more than likely going to see SPY at brand new all-time highs in the very near future. So the critical resistance breakout will be at 471 with that next price target up there at 477, and the critical support level is now our 20 simple moving average yet again at 464. Now there is a gap to fill down here at 461, but there's no guarantee that gap has to get filled immediately. Remember, we know that gap will get filled, and it's not a matter of if, it's just a matter of when, but we don't necessarily have to just go right back down and fill that gap immediately. So the strong critical support will be 464, and if we break below that, look for the gap fill support right around 461. Below that, we still have strong support at the 50 EMA at 456, and at this point, with the bulls taking back over control, it's very likely we will stay above these critical support levels. We're very close to regaining the full bull trend. We just need a few more days closing above the 20 simple moving average, and we're back into that full bull market. How quickly it happens and how readily you have to be. And that's why I talked about that 1 hour price target where we saw the double bottom look. Remember, just last night, we just got done going over this with the double bottom, and we did get that confirmation breakout of the neckline. And I told you because of this, the head to the neckline breakout would give us a price target at 467. And we saw SPY closing way up here at 468. So pretty accurate within $1. Now you can see we do have the gap, which will be strong support if we do break below 464. So watch those strong support levels, and we do have the successful double bottom. And right now we're looking for a confirmation of the bull trend with another higher low. So we want to continue to see higher highs and higher lows as we continue to impulse higher. And we're more than likely going to start impulsing higher, because if you know anything about Elliott wave, after a correction, you're going back in the general direction of the trend, which is still very bullish. I can prove this to you very quickly by switching this over to the weekly chart. And you can see on the weekly chart how bullish this chart is looking. We started out with the possibility that we could see this chart going bear if we started closing below 450, but right now you can see how giant this green candlestick is for the week. Even though we're not yet complete through the week, we still have to close up here on Friday. So you can see it looks very likely on this weekly chart we are going to stay in a macro level bull market, and that's why I always tell you to stay a bull in a bull market. We have a strong bullish trend on the weekly chart, so why would you get overly bearish at support when the rest of retail is also getting bearish? Remember that when the majority thinks something's going to happen, it usually won't happen, and we definitely saw the majority of the people getting way too bearish down here at support. You can also see on the monthly chart, we're getting another reversal. After we did see a very bearish looking reversal candle in the month of November, we're now getting a very bullish looking reversal candle in the month of December. We have a long way to go, so we're not counting our chickens before they hatch, but we can clearly see a lot of bullish price action with today's charts. So don't get bearish in a bull market. I tell you time and time again that when you're on critical support levels, that is a buying opportunity. And then you're setting your risk at critical support. And if we break through that level, you can take the small loss. It's okay to take losses as long as your losses don't outweigh your wins. So right now it looks like the price action is extremely bullish. And remember that I told you last night, don't worry about low volume. We saw it all the way back here in October and November that the bulls went all the way up to brand new all-time highs on low volume. So don't let anybody scare you from buying into a bull market because we're going higher on low volume. There's a saying that the bulls take the stairs up and the bears take the elevator down. So the bulls go up on low volume and the bears go down on high volume selling. So right now we're definitely seeing some healthy volume, even though it's lower than the selling days. That's to be expected. So stay objective, because if you're staying objective, you know that we are absolutely crushing this market and we continue to stay on the right side of the trade. And if you didn't know, Santa Claus is a bull. Now there is a chance the Grinch is going to try to come and steal Christmas, so we still have to stay flexible and we still have to pay attention to what's going on around us. You don't normally hear me talking about news, but the Fed FOMC coming in the middle of the month will be important, and we will be putting a lot of weight on that on the Stocks Channel Discord to make sure that we don't miss anything in the macro level bull market that could possibly hint the stock market is getting ready to soften and potentially go through that full-blown correction. But right now we're trading with exactly the price action we can see in front of us, and we're staying objective and crushing this market. Jumping over to the NASDAQ 100 triple Qs, you can see we also had a very bullish day today, going up over 3% and blasting right through that 20 simple moving average and breaking our resistance trend line. So it's looking more and more likely like this was all just an ABC correction, and we did complete it down here right around 379. We're back on the bull with an impulsive bounce and a huge gap up open, and we're back above critical support. So right now on the triple Qs, it's possible we come back down to test this breakout and the 20 simple moving average. So look for the triple Qs to potentially retest 394 to about 395. It doesn't have to happen if we continue to impulse higher, but it is very healthy price action if we do back test the breakout as support. Now the top of this gap will also be support at 393, and the full gap closes down here right around 387.8, and our 50 EMA is also another critical support level right around 386. So the bulls have completely flipped the script and played the Uno reversal card, and we're right back on the bull in just one bullish day of price action. We saw signs of the reversal down here, and that's why I told you it was likely going to be a bear trap. And right now we're getting the confirmation with the breakout, and we just need to see one more follow day through with tomorrow's price action to know that this is the real deal breakout. But overall, it's hard to look at this chart and not think this is the real deal breakout. But if you really want that confirmation, wait for one more day back above these critical support levels. Your critical resistance on the triple Qs will be 401, the previous all-time high right around 405, and the new price target up here just below 410. We can go higher than that, but let's take it day by day and step by step. Watch the critical support levels, and as long as the price action is staying above those levels, we will regain the full bull trend on the daily chart very quickly. Jumping over to the Dow Jones, again, more bullish price action with the Dow Jones going up 1.39% and reclaiming the support level above the 20 simple moving average. So you now see bullish price action on all three indices, which tells you this is more than likely going to be the real deal bull rally. We're back above the 20 simple moving average, so the Dow Jones now has critical support at 355 and the full gap close right around 354, and the 50 EMA is our other critical support just above 353. So we have very strong support levels on the Dow Jones, just about $1 apart from each other, and we're very close to regaining the bull trend if we can continue to close above these critical support levels. Critical resistance to the upside will be 359, right around 362 and 365, and above that we're going to brand new all-time highs. So we're seeing very bullish price action across the board, which tells us this is more than likely going to be a sustainable bull rally. Jumping over to the Russell 2000, again a very strong impulsive bounce going up 2.3% and closing back above that critical resistance breakout level, which was right around 221. We had another gap up open, so we will have critical support right around that breakout level at 221, which will also close the gap. Below that, we still have the most critical support level at 213, which we have to see the Russell 2000 staying above, otherwise we will likely see a full-blown bear market. We have not yet seen the Russell 2000 breaking out of the downtrend. We still need to get back above this resistance trend line right around 229, fully close that gap, and break out back above 232, which will get us back above all the moving averages. So the Russell 2000 is definitely playing catch up, but remember the Russell 2000 is not that important when we see the other three indices, which are the powerhouses leading the way higher. It's more than likely the Russell 2000 will play catch up. So if we're seeing the other indices going bullish, it's more than likely we'll eventually see the Russell 2000 breaking out bullish as well. So watch those critical breakout resistance levels right around 228, 229, and 232, with critical downside support at 222 and 221. Below 221, we could still find support at a minor support level, but it's more than likely if we start breaking back down below about 220 that we're coming all the way back to 213, which I don't necessarily expect to see, but always know all your scenarios and be prepared no matter what. On the Arkk ETF, we were up over 5.4% today, closing back above the 5 EMA and opening a gap below. Just a general question, let me know in the comments below if you still want me to keep covering Arkk ETF, otherwise we can drop it and add another ETF. But other than that, we'll be looking for support right around 98, 94, and 91, and above that we're looking for the resistance breakout level above 107 and eventually getting back above 113. The Arkk ETF more than likely saw full-blown capitulation, so it could be possible we see a very bullish impulsive rally from here. We'll know for sure if we see the breakout above 107 and 114 and eventually get that breakout back above 119. On the VIX, we saw the VIX getting crushed pretty hard today with the VIX going down over 19%, and we did see the VIX closing back below our resistance trendline breakout, but leaving a gap in the process. So we have a gap back up here at 26.7, which could be the next fear-mongering event when we close that gap, which could be the Fed FOMC, which is just a couple of weeks away. So look for the possibility that that will be the next buy the dip opportunity if we can close that gap and see a lower high on the VIX and continue to trend lower. The next bullish breakthrough for the VIX will be a close below 20, and we'll be a lot more cautious that this is all just another trap if we see the VIX start spiking back out above about 26 to 27. So right now the VIX is confirming the bullish move, and the next confirmation would be that breakdown below 20. On Bitcoin, we're currently up about 0.3% and not seeing bullish price action like we're seeing in the stock market. Bitcoin is now below our critical support level, which was right around 53,000, and failing to break back above that level. So the longer Bitcoin stays below 53,000, the more likely we're going back down to these support levels right around 44,000 and possibly even the wick low right around 42,000. If the bulls are not out here buying the dip in Bitcoin, we're more than likely going to retest that critical support, which could be bullish in the long term if we do get a double bottom. So look for those critical support levels to the downside, and the bullish breakout will be back above 53,000 and back above 60,000. On Amazon, we were up 2.8% today, and we're definitely seeing the Amazon bulls starting to step back in, and we're back above the 50 EMA. So if you want to trade Amazon, you can take on risk anywhere above the support trend line with the critical support at the 50 EMA right around 34.60. As long as we're above this support trend line, that does mean we're forming higher lows, which means Amazon could continue to trend higher. Look for the next critical breakout level at the 20 simple moving average at a break back above 35.30 and our resistance trendline breakout level at 35.70. If we can break out above that, we could go back into another bull trend and we could eventually see brand new all-time highs. If we start breaking down below about 3,400, you need to exit because we could be coming all the way back down to about 3,300 or 3,185. On Tesla stock, we were up just over 4.2% today, and we see Tesla bouncing off that support level at the 50 EMA. Remember, the bears are starting to take over control of Tesla ever since we broke out of this wedge, but if the bears can't break below the 50 EMA at $1,000, then the bulls could start taking back over control. The bulls need to get back over the 20 simple moving average at 1080 and then back above the median of this wedge, which is right around 1145. Above that, the bulls could close the gap at 1208 and try to break out at 1240 for that eventual price target at 1400. However, if the bears can break down below support at 1000, you're looking for the full gap close at 909 and possibly even 843. So watch that extremely critical support level at $1,000, and if we break below that, it should be a quick trip down to close the gaps. On Apple stock, we were up over 3.5% today, and we're seeing Apple leading the stock market higher. Apple gapped up today, which is very impulsive bullish price action, and closed right on top of our price target at 171. We closed slightly above, so if we continue to see Apple going higher, the next price target will be up here at 176. Remember, Apple is a market moving stock, and it's one of the biggest stocks in the entire stock market. So if Apple is looking this bullish, there's really no reasons that you should be getting overly bearish. We're in an extremely strong bull trend with very impulsive bullish price action and just blasting through resistance level after resistance level, and we're doing it on very high volume, so there's definitely a lot of buyers behind these moves. To the downside, you can now find support at the gap close at 168, we'll have support at 166, 162, and our 20 simple moving average at 158. As long as we're above 162 and 158, you need to stay on the Apple bull. On the financial sector, we were up 1.79% today, getting back over the 50 EMA and trying to get back over that 20 simple moving average. We still have a gap to fill, and we could still break out and try to go back into another bull cycle. The industrial sector was up over 1% today, getting back above all the moving averages with the price action and closing the gap above, so we could be seeing the industrials trying to go back into another bull market. The healthcare sector was up 1.29% today with bullish price action above all the moving averages and starting to build a bullish trend yet again. The energy sector was up 2.34% today with the price action back above all the moving averages, and we're trying to break out of our resistance trend line to go back into another bull market. So jumping back over to the S&P 500, you can see how quickly things have changed. The bulls have now taken back full control of all the critical support levels, and you're now seeing the sector starting to see bullish price action and closing some of those gaps above. If we can get bullish breakouts across the board and see all of the sectors going back into a bull market, we are definitely going to see the Santa Claus rally, and we're going to see SPY getting to levels that most people were only dreaming of. I'm talking about levels that could take SPY into the 480s and 490s and possibly even 500. Don't rule out the possibility that this could be an extremely bullish rally. There was a lot of bearish sentiment and there was a lot of people trying to short this market and that were going to cash, and they will eventually FOMO back into this bull market, only driving it higher. So I'm telling you, this is the real deal bull rally, and this did turn into a bear trap just as we expected. So if you're still bearish on this market, I hate to tell you, but you're on the wrong side of the trade and you need to make sure you have a proper exit strategy. Remember that we always stay objective right here on the stocks channel, and we've been absolutely crushing this market. Be a bull in a bull market, and remember that the path of least resistance is still higher in the indices. Also, just a quick reminder that I do have bank trade alerts, which is absolutely crushing this market volatility. And you can see that bank trade alerts was up over 4.5% today. I'm telling you right now, with the Black Friday deal to get 67% off your first month and this volatile bull market, now is the best time to be a bank member. Bank trade alerts only trades the ETF TQQQ, and it's algorithm driven, where you get all of your alerts directly via email and text message. If you want to join Bank Trade Alerts and claim that Black Friday discount deal, you can find out how to do that by clicking on the link in the description below. Also, don't forget that I have my Stocks Channel Discord, where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you want my updates instantly as soon as I see something happening in the market, then you want to be on the Discord server. You can find out how to join the Stocks Channel Trading Discord community by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.